So you're gonna buy a house. Terrific! You know, buying a house, for most people, it's gonna be the most expensive thing you'll ever buy. And it's not like buying a blender or a TV where you can look online to try to find the best rated one. It's a little bit different. So I'm gonna go over the basic steps to help you buy a house. And in the description below, there will be a link so you can download a buying a house checklist just for you. Hey, this is dale.shin, realtor in the Los Angeles area. If you're new to my channel, click the subscribe button and click the bell to stay tuned for new videos whenever they hit. Alright, so first things first, let's talk about money. So you need money, obviously, to buy the house. And first thing you want to determine is, are you going to be buying it all cash or are you going to finance it? So if you're buying it cash, no problem. You just pay cash. You put in a contract for the house, and then you arrange to wire or somehow get all the money to the seller. If you're financing the purchase, then you're going to put in a down payment and then get a home loan. And so you want to have that cash ready for the down payment. What you might not know is you also need cash for closing costs, costs related to the transaction, like escrow services, the payment for a home inspection, lender's fees, a bunch of other little fees that are involved in the transaction that you'll need to pay at the close of the transaction. So you'll need the down payment and closing cost funds in your bank account ready to go. The other part of it is getting the loan. And what you want to do is actually get pre-approved for a loan before you actually even start looking for houses. Because it's kind of like going to a store without any money. You wouldn't do that, right? You wouldn't go to a store without your wallet, because then there'll be no way to pay for it. So it's important that you talk to a lender, get pre-approved for a loan. And there's many benefits to that. When you talk to a lender, they're going to ask you all kinds of questions. They're going to want to see your paycheck stubs, possibly your W-2s, maybe even your tax returns. They're going to want to know how much you make every month. And they're going to run your credit report so they can see what your credit score is like, your FICO score, and what your payment history has been like. They're also going to see what your income to debt ratio is. And the lower that is, the better for you. If you have a lot of credit card debt, if you have a lot of just loans out there, and your income is not high enough, then I'm sorry, you're probably not going to get pre-approved or just approved, period, for a loan. So it's good to try to get pre-approved up front, because then you'll know your situation. If you don't get pre-approved, then you've got to work on your situation, work on your finances to improve it so that you can get approved for a loan. Because if you don't get approved for a loan, well, you're not going to be able to buy a house if that's the way you were going to buy it, with a loan, by financing it. So before you start looking for the house, you might want to narrow it down to what kind of house, what kind of property you want to live in. Like, do you want a single family detached home? Or do you want like a condo or a townhouse? That aside, you probably want to think about the basics, like how many bedrooms and baths do you need? How big of a house do you want? Does it have to have a pool? Do you want a garage? Things like that. And then one of the more important things is location. So here in LA, where everything is so spread out and traffic can be a nightmare, you typically want to live close to where you need to go all the time, like your job. So if you live too far away, it could get, it could be a toll on you. It could be a real pain. And then finally, it comes down to budget. And that's where getting pre-approved for a loan really helps. Because when you know how much of a loan you could get, you know how much of a house you can afford. All right, so now that you've gotten that out of the way, now that you know what kind of house you want, what kind of property you want, how much you can afford, now it's time to go looking. So you can go on the internet, there's tons of real estate websites, like Zillow or Trulia, Realtor.com, of course, and you can, really narrow down what kind of house you want, number of bedrooms and baths and so forth, and, really hone in on what you want, which areas and the price range and so forth. Then you should come up with a list, obviously, of all the homes that interest you, that are in the criteria that you want. And then go and take a look at as many houses you can in person. Of course, you want to check it out before you buy anything, but other than that, you want to go and see what the area around that property is like. Like, what's the neighborhood like? Is there a lot of noise? Is there something that you can't see on the internet that only an in-person visit will tell you? So that's why you want to go see as many houses in person. And by seeing as many houses in person, you can also get a gauge of, or get a sense of pricing. You know, like some houses might be just way overpriced, and some houses might be a real bargain. And so the more houses you see and the price ranges they're in, you can get a feel for the market and be better informed for your purchase. All right, so now you found the house you want to buy. And now it's time to put in an offer, a written offer. You can't just do it verbally because that's not binding. So anyways, you're going to want to put in a written offer specifying how much you're going to pay for it, how you're going to pay for it, like if you're going to finance it or all cash, if you're going to finance it, how much down payment, as well as how much of a deposit, initial deposit you're going to put in, so on and so forth, how long you're going to take to finish the transaction, like how long is the escrow period, what contingencies you want, and so forth. So if you're here in Southern California in the LA area and you hire a real estate agent to help you, which is always a good idea, they're going to use the California Association of Realtors forms. And they have really good forms. It's been developed over many years, over many lawsuits, so there's some good protections in there for you as a buyer and for the seller as well. It's pretty even. And a few of the things you definitely want in your purchase offer are some contingencies. And contingencies are a way that you can get out of the contract if you discover some things that just are not going to work for you. So for instance, there's three big ones, and there's only like three of them. One is the loan contingency, where if you can't get a loan, if you're going to buy the house financing it, and you can't get a loan, then you can get out of it. Because obviously if you can't get a loan, and that's the only way you're going to buy it, you can't do it. All right, so that will get you out. The second one related to that is the appraisal contingency. So if you get a loan, the lender is going to have the property appraised to make sure that it's, the purchase price and how much they're going to loan on it is reasonable. So for instance, most lenders, they loan up to a certain loan to value ratio, and that's typically 80%. So if a house is appraised at, let's say, $100,000, they'll loan up to $80,000. And so they need that appraisal to make sure that whatever purchase price you're buying it at, the appraisal is there so that they know that the property they're going to loan you money on is worth what you're paying for it. And the third contingency that you definitely want, that is going to be included in the California Association of Realtors purchase agreement, is a physical inspection contingency. So naturally, you're going to want to make sure the house is in good shape and that there's no major problems. This inspection contingency lets you out of the purchase if you find that there are some problems or some issues with the house that you just don't want to deal with. For instance, let's say the house is really old and the sewer pipes are really old, and there's some huge trees in the front yard and all the tree roots have gone into the sewer line, and it's going to be really expensive to fix that. It could be like $20,000 or more to dig up all those sewer lines and replace it. So if you find that out, you don't want to spend another $20,000. Let's say the seller doesn't want to negotiate and kind of help you work that out, then you can cancel. And there could be a bunch of other issues with the house that might turn you off from buying it because it's just too much of a headache to deal with. Okay, so you've prepared the offer, you've made sure that you've got those right contingencies in there, which you should if you're going to use a California Association of Realtors form. Now you submit the offer to the seller, and the seller is going to either say, okay, I like it, I accept, let's do a deal. Or they might say, no, I don't like your deal, buzz off. Or three, they might say, you know what, I like it, but let's change this. They're going to counter offer you. Maybe they don't like your price, or they want you to remove some of the contingencies, or maybe you're taking too long to close the sale, so they want a shortened period. Whatever it is, they could come back and counter offer it. And if you get a counter offer, then you can respond also with a yes, no, or your own counter offer as well. And once you come to some kind of agreement, then you go into escrow. And escrow is the process of completing that transaction. And typically there will be an escrow company, which is a neutral third party that you hire that will oversee this transaction and make sure all the T's are crossed and the I's are dotted. They'll make sure that the money comes in from you as a buyer and gets sent to the seller and pay off any of the seller's loans or liens on the property to make sure that you as a buyer get the title clear. And part of getting clear title is making sure that you have title insurance, which is something that you have to pay for. The seller will typically pay for part of it here in the LA area, but if you're financing it, you're going to have to pay your lender's part of the title insurance. Once you're in escrow, this is your time to do your due diligence. So this is when you actually hire to have a physical inspection done on the house. This is when the title insurer will provide you a preliminary title report showing you the whole history of the property and making sure that they can deliver to you clear title, meaning that there's not going to be any issues with previous owners saying, oh, that's still my property, or if there's any loans on the property, that all of those will be cleared out through the transaction, through escrow. And so this is when you're going to also have the opportunity to look at a bunch of reports, like a natural hazard disclosure report, which is typical. You're going to get a report showing what kind of hazards are in the area around the property. And so if you don't like something, then you can, cancel the sale. Like if there's some huge, garbage plant right next door, and you don't want to live next to it, and you didn't know that before, but you found out through this report, then that will be a reason that you can cancel using a contingency. The other paperwork you want to look at are the seller's disclosures. So the seller is required to fill out a bunch of disclosure forms where they have to accurately and truthfully tell what they know about the property. So anything bad, really, they're supposed to report and disclose on this thing. And it's up to you to look through that and make sure that you're satisfied with it. And if you have any questions about it, you should go back to the seller and ask them for more details until you're completely satisfied and that you're okay with the condition of the property. All right, so you order for the physical inspection. The physical inspection report is a very kind of general report. The inspector will note any kind of issues with the house, and if there's some systems like electrical panels or sewer systems or air conditioning systems, they're not going to be fully well versed in those kind of systems. But if they see some kind of issue with it, they might suggest that you have it checked out by a professional, by a specialist for that kind of system. So if you do see some kind of note like that in the general physical inspection report, then you might want to hire a specialist to come out and look at that. If the physical inspection report shows some items that need repair, that is an opportunity for you to negotiate with the seller. So you can go to the seller and ask for the seller to repair these items or to give you a credit so that you can repair it on your own dime later. So if you ask the seller to make the repairs, you'll have an opportunity a few days before escrow closes to go back to the property and make sure those repairs were done and verify the condition of the property. Also during escrow is when your lender will send out an appraiser to do an appraisal on the property. When the appraiser comes out, they're going to look at the house kind of like they're doing an inspection, and they're going to compare it to similar properties in the area, and they're going to provide a report showing what they believe the value of the house is. Okay, so let's say your physical inspection report came out okay, you're okay with it, all the reports, you're okay with those too. So now you can, and you're clear to move forward and close the sale, then you would remove all the contingencies. Then you wire escrow all your funds, and then escrow will be in touch with your lender as well, as long as the appraisal came in at value, and they'll arrange to get the money wired from the lender to escrow. And the escrow will take all those funds that you provided, your down payment, cash, and the lender's loan, and pay off all the existing loans that the seller has and any liens if there are any, and then wire the rest to the seller as their net proceeds. Then escrow will also record the grant deed where the seller is signing over title to the house to you as a buyer. Once that title is recorded, you are officially the owner of the house. Congratulations. Alright, well, I hope that was helpful. Please see the link below in the description so you can download a buying a house checklist. Also, please let me know what you think of the video. Give it a thumbs up if you liked it. If you didn't, give it a thumbs down. Let me know why though. And subscribe and click the bell to be notified whenever new videos hit.